Good morning, everybody. Welcome to the Flow Show. Thursday, 13th of February, day before Valentine's Day. Hope you got my card ready, Kay.
Oh dear, is it Valentine's tomorrow? Oh,
It is. You've forgotten to get the missus a card, haven't you?
Okay. Let me get back to you. I need to do something.
And now we should
Now,
play.
made restaurant booked and everything.
Yeah, good. Oh, restaurants, what are they? I forget what they are on Valentine's Day. We'll be having dinner at home with the kids, as usual.
Pizza,
As well.
pizza, but with an extra topping.
Extra topping for that special lady. Yeah, for everyone else, partners and whatever, it's Valentine's Day tomorrow, so don't forget. Don't want to see any black eyes in the chat room tomorrow from those who have forgotten to get the old flowers and whatnot. Right, let's get cracking. Where shall we start? Am I even up to date on everything? I don't know. Yes, I am. Right, data then. Japan. It's still coming up roses over there on the price front. PPI this time coming in solid, up 4.2% year on year from 4% expected. So the inflationary snowball continues to roll over there. CPI out of Switzerland isn't looking as good though. Headline CPI coming in unchanged, or as expected, sorry, at 0.4%, which is 2 pips down. The EU harmonised number, the HICP, also coming in 2 pips down at 0.2% versus 0.4 prior. However, the core number, which is not on this calendar for some unknown reason, came in up 0.9% year on year. Was expected to drop to 0.6 from 0.7, so it's come up 2 pips. Does that do anything for the SMBK? I mean, their next meeting's not until March anyway.
Yeah, it's not until March, and everybody's always speculating that they may be tempted to take rates down to zero or even negative if needed. But do you know what? I think they have enough time between now and then to judge what's going on. Also, perhaps a little bit like all of them on the geopolitical front. I'm going to say that for the time being, I think they will pause, and things can change. But I think there's no need when you look at the year-on-year CPI. If you want to remain at least flat or not go into negative real rates, they should not move right now, because there's a difference, well, or there's a step between trying to please your Swiss Inc. With lowering rates and trying to not to let the Swiss go too strong and then take real rates into negative. There's a bit of a step there, and I'm not sure it's warranted that they will need to do that right now. They are already at the bottom of the pile anyway.
Yeah, absolutely. And yeah, they've got plenty more data that they can get until that
Yeah.
March time and see what's going on with tariffs and the rest of the geopolitics. So plenty of time for those guys. As you can see, their German final CPI numbers all unchanged. So nothing to write home about there. UK data. A lot of green today makes a change. We had GDP, industrial production numbers month on month. IP and MP coming in solid, up 0.5, up 0.7. It has been looking a bit stinky, so a bit of a bounce back there. Year-on-year numbers still well in the negative. They're green just because they were less crappy than was expected, but in some cases still worse or around as worse as it was last month on the year-on-year numbers. GDP, the government, and particularly Rachel Reeves, the Chancellor, who's been under the cosh of late, will be doing a little jig at that monthly number of 0.4%. Whoopee. The quarterly number, 0.1%. Nothing here is really a cause for celebration. That we may have closed the year off with 1.5% growth, a little bit of a potential bonus. But like a lot of countries, a lot of economies, not exactly firing on all cylinders. Has got the market just adjusting its rate expectations. Oh, don't ask me why. We're now only seeing around 56 basis points of cuts, or effectively 2 cuts, down from 3 cuts previously. Obviously, these things switch around on every piece of data. BOE's Green says it's appropriate to maintain a cautious and gradual approach to removing monetary restrictiveness. It says data over recent months, though, has been uncomfortable. Bank of England's Peel says, I do expect we can cut rates further, but then urges caution on further interest rate cuts. Make that one up as you go along, mate. Over in ECB land, that wonderful, pretty pink fairyland that they like to live in, ECB's Elderson says inflation is converging to target, and says the data is more important than the neutral rate for policy. ECB's Nagel, he's put his little minions to work at the Bundesbank, because their calculations put the neutral rate at 1.8 to 2.5%, which is a few pips up above where the ECB see it. He says that economic spillovers could mean inflation falls below target, but it's not a high probability scenario. As I've been saying, I think it is a high probability scenario. So we'll see who's right and who's wrong. Wojcik says the ECB can keep cutting rates even if the Fed takes it slow. He's sticking to the fact that the market's assumption of 3 more rate cuts is not unreasonable. We did have a bit of a sources story out this morning as well from EconoStream, saying that at the next meeting, the ECB may remove remarks to restrictiveness in their language, in their statement, i.e. saying that rates aren't restrictive anymore, that they're more on a neutral setting. We'll have to wait and see if that happens. Coming back to yesterday's data, and a bit of a blowout in the CPI number. Came in hot. CPI was expected to come in unchanged 2.9, went up to 3%. Core went up when it was expected to go down 3.3%. Then everyone's obviously counting all the bits and pieces underneath. Wages as well. They came down. Average hourly earnings came down to 1% from 1.2% year on year. So that was a little bit softer. Average weekly earnings year on year, though, went up a pip to 0.7%. Getting into the nitty gritty, the good old super core, that jumped month on month to 0.757% from 0.205% month on month. The year on year number came down a tiny bit, but still looking strong over there. And then looking at some of the components, it looks like transport did maybe a lot of that heavy lifting in those higher CPI numbers, because good old services metric that the Fed's been worried about, that came down to 4.3 from 4.4%. Shelter, another one the Fed are looking at closely, came down to 4.4 from 4.6%, but the transport metric in services went up to 8% from 7.3% previously. All that hot data kicked our expectations. We're now looking at December as when the Fed are potentially going to cut next any further, and we'll be running out cuts for the whole year. Kate, another day though where quite a decent reaction to the data, but it lasted the proverbial 5 minutes.
Exactly. And you look at, you ran through the sterling data this morning, the US data yesterday were not too much different, because we are, no, this is, we have to distinguish effects from rates here, from bond markets. The bond market responded to it. We had we had a weak 10-year auction after that as well. But the FX was really a 5-10 minute blip, so to speak. It's brings me back to, if you look purely at FX, brings me back to saying what I've been saying for a number of years now. You do trade inflation, but it's not while inflation goes up that the currency necessarily has to be strong, and that is one thing I reckon that is starting to filter through into the dollar because it's defined by other factors as well, not in the least geopolitics, of course. But then also bringing it back to pure data in FX, we're seeing this morning again on the sterling as well. Cable ramps higher and then gives everything back. This is unfortunately how this market is now trading everything. It's very short-term gains, and then we put the ball back in the middle and start kick off again for another round of football. So on the rate scenario, it's slightly different because there is this overhang of disinflation in the bond market. Also, the Republicans, I've seen that they are planning to ask at least to raise the debt limit again. So that there, I think the bond market will likely stay a bit under the cosh. The market, as you say, is rebalancing, rethinking, pendulum swings like on every data point. And welcome to the Trump era in one way, and welcome to Algoland on the other way. The models are crunching numbers now, and then they react to it, and that's going to be our fate, I guess.
Yeah, very much. Our mate One Print Gall's Beast said inflation data today was concerning, but it was just 1 month. Funny how after the PCE he was encouraged by the inflation data. Now he's flipped the other way, saying it's concerning. He actually used the term sobering in another comment. He said there's no question if we get multiple months like this, then the job is clearly not done. Fed's Powell didn't really get anything explicit on the inflation side of things. Everyone was sort of hanging around to see if he would comment on it. Only a few comments worthy of attention. He said possible that Fed could have to move rates on tariffs, but we're going to make decisions about rates as we go. He says clear progress made on rent inflation, but we're not there yet. And said we didn't see much progress on core inflation last year. Says markets are not pricing in higher inflation, but could be pricing in the risk of higher inflation. He says he's looking for the PPI data today for a read through to PCE because the Fed targets PCE inflation, which is a better measure than CPI, or at least he's made PPI today a bit more interesting. Says the Fed doesn't get excited about 1 or 2 inflation readings. Okay, I'm going to make my point as usual. Core CPI in the US is still, or has been above 3%, and it's getting close to 4 years now. And that's not just, we've not seen any moves under 3%. So 1 or 2 readings, well, the charts never lie, shall we say, and that's saying something completely different. Anything you got from Mr. Powell?
No.
Good.
No, really. I mean, he's been in his own self, of course, fighting back on some questions about his own job and his relation to, let's say, the U.S. administration. But no, for the rest, he hasn't given us anything else than he's in the waiting room, just like all of us and all of them. And that is the point where we are at now, which we have repeatedly been saying. It is unfortunately how it is. They can't do anything more. He did say, as I think you pointed out as well, that they will react to. They need to first see the policy, the trade policies before they can react. So they have a reaction function, not a front-running function, and that is the same for all central banks. Sometimes I think market or some commentators, and then I'm talking especially about all the people on Twitter or X. They think the Fed or any central bank should do this or should do that. They completely forgot the role of a central bank or the functions of or how a central bank functions. A central bank is not there to front run events. They react. And now we are in the waiting room, and they are as well.
Yeah, yeah, very much so. And that's a good point you make about central banks. Yeah, they're not there to run economies and pander to the market. They're there to assist economic growth and underlying conditions and everything to do with that. Bank of Canada, though, they say the tariff threat souring confidence would make cases for a rate cut. They say tariffs could cause further weakening in the loonie. Bit of a no shit Sherlock comment there. RBC Capital, they now expect the BOC to hold rates at their next meeting in March. President Trump says interest rates should be lowered. He said that after the CPI data. Go figure. He's apparently had a lengthy and highly productive phone call with Putin, which the Kremlin finally confirmed. And they said that contacts will continue with the Trump team. And they are focused on preparing for a personal meeting with Trump. Ukraine's Zelensky also said he had a meaningful call with Trump. Now, I think we were talking about the war, K, when it first happened and how it goes in stages. We've got stages again. It's good news that potentially people are starting to talk. Whether it leads to anything is another question, but this is a first step, and we perhaps saw a bit of market reaction to those we're talking type comments, particularly in the Swissy, I think we noticed yesterday.
Yeah, absolutely, and also in parts in the yen crosses. So yes, I mean there is a how shall I say, if when it all started, people made correlations to certain currencies or risks or geographical zones who were the most likely affected and things. So it is normal that if those have been modeled, those kind of impacts, some of those impacts are now waning because just of the actual fact that there is an outlook for a difference, a difference in or an evolution, I should say, in all the events. So that is a bit normal. You see the risk coming back. You see euro has been benefiting from it as well. The dollar has been offered on the back of it as well. So this is one of those stages again where you say that yes, I mean there's a change here, and then now as you say, this stage is one stage, and now we will have to see what the next stage will be.
Yeah, very much so. But
and if I may, the next stage is probably going to cost Europe an arm and a leg, and possibly even two arms and two legs.
Yeah, but I think it's difficult to ascertain. You know, they're pumping tons of money into it. So will that effectively stop if you know, because there's going to be a big rebuilding job to be done, which could actually, in a quirky way, be a bit of a boost to some European countries and firms who will be tasked with a job. Obviously, the US will probably be front and center of all that as well. But I think until we get an actual headline that says, you know, the war's over, withdrawals are going to be happening, we're probably going to see a lot of jumping around like this in markets.
Yeah, absolutely, Ryan. It's undeniably a big event. If it was very big when it started, it will be very big when it ends as well. And then afterwards, people will get out the abacus and see who is going to pay for what, how much is going to cost. The way Trump paints it, if he gets what he plans right now, but we know how plans can evolve all the time. That's why I'm saying it's not necessarily going to be a very good deal for Europe. And the fact as well is that Trump negotiates with Putin and with Zelensky, but hasn't, apart from perhaps a few emails here and there, hasn't brought the Eurozone to the table, and that I think may in the end be telling.
Yeah, that'll probably put a few noses out, particularly Mr. Macron, who likes to stick his beak into everything
Yeah.
over there. Right, let's move on. White House Economic Advisor Hassett says micro and macro policies are needed to address inflation. Says we will fix inflation with or without the Fed. Says more energy supplies and less rules will help curb inflation. Expect rates to come down. Says reciprocal tariffs are a work in progress, and talks with other countries on those began Wednesday. Canada Finance Minister LeBlanc says Canada won't do tariffs before the US does. The focus is still on avoiding tariffs. Mexico's Sheinbaum says we are going to send a message to the White House on steel and aluminium tariffs. And again, just a little sideline of what's happening in the world, and some of these potential knock-on effects from Trump and his tariffs. Indian steel minister is considering a 15 to 25% temporary tax to curb rising steel imports. He says rising China steel imports pose a serious challenge to Indian firms. Hamas has said, apparently, according to Al Jazeera, that the hostages, this hostage swap on Saturday will happen according to schedule, although Israeli PM Netanyahu has apparently denied that report. Government jobs, US government jobs, we're now up to around 75,000 federal workers who have accepted the resignation, redundancy program, whatever it is. So we're expecting, or some expectations were around, 5 to 10% of the workforce, which was sort of 150, 300,000, but we're at 75,000 for that. So not a huge number. Again, we don't know when that might pop up in any of the jobs numbers when that all goes through. That's it on the headline front. Kane, has you got anything else?
No, it's all good, Ryan. I think we went around. We went around the globe there.
Yep, thank you very much, mate. Right, where should we start? Well, might as well start here on the Swisser, Euro Swiss. So this was the rally we saw yesterday morning and into the afternoon was a bit more on the these peace talks and a bit of a risk move on the back of that, but we got up towards into that 95s and now we're already crapping out again back down into the range. Similar story in a lot of pairs. Euro dollar had a move, bounced back strongly from that sell-off we saw over the CPI data, come back up into the 104s. We're just finding a little bit of resistance now, just shy of this 50-60 zone up here, which has been an on-off sticky point for quite some time. So we're in that situation where the market is happy to move it around a bit, but it's not really that interested in taking on some of these bigger levels. So we're still in valid downtrends. We're still not making any lows though, so it's still in a bit of a flux, I think, Kay, at the moment. A lot of these pairs, no one's really wanting to push the envelope either side.
Yeah, you showed a really good chart there at the start for the Euro Swiss. If you look just a little left, what is it, 95 and a half there? That Euro Swiss pop. Am I? Yeah, that 95 and a half goes back to September. And it's starting to look like that's going to be key. We can see even a little before, around early August or in July. It's been a low before we had the big dump down to 92 the figure, and that 95 and a half looks quite interesting to me on the Euro Swiss. That's probably going to be a gateway for much higher if one day we get through that zone. But I also think that it shows us the reluctance of people to continue to buy euros in a way. It's not only a Swiss picture, but it's also a euro picture. And we find if you look at today's euro yen, we find it back a similar kind of picture, where we have this rally and then we stop and fade because it's not. I mean, people are really jockeying between who do we have which currency do we have confidence in, but for how long as well. And I think that shows that the confidence levels in really taking on big moves, as you say, is still relatively low, in my opinion.
Yeah, yeah, very much so. And a lot of pairs doing the same thing. Cable had a little rally on the data, giving it all back again, or giving a lot of it back already. We're above this 124.50 that we seem to be glued to a lot of the time. Poked a nose above 125, but much like previous times, we can't hold that move above there. Haven't managed to really do it all year. We had a little half-assed attempt there, but that didn't last long. So again, unless we are busting up through some of these big ranges, then we're not really going anywhere. This one looks a bit more constructive than some of the others. We're still making higher lows. We're just not making the higher highs anymore. So a lot of sideways action here. Mike, keep asking about Aussie dollar, mate, and it's not doing very much. Again, a lot of other pairs at the moment. We having these little moves above the zone, trying to get into 63s, and it's failing time and time and time again. So unless you start to see, the price doing something like this, building a bit of action up there, getting a bit of support against that, you're not going to get anything that's going to take you up there, unless it's a big headline or something. But while we're doing this waffling around, it's we really can't take any side. Okay, you can't even really trade around this zone because you're getting dips underneath it. It's coming back. You're getting rallies above. So you've got to look for, either that happening or on the downside that happening. Where the bottom of the zone becomes solid resistance, then you may get something like that. But here, it's a nothing. I got knocked out my try. I tried it yesterday, seeing if we held the top of this zone. It didn't. Got flipped out to down there, and now we're here messing around again. So I really don't know what you can do with this one. It's and it becomes a bit difficult to trade. Yeah, there's you can scalp off these low levels down here. If you get down there, that's fine and dandy. But if you're waiting for a solid move, it's just not happening yet. And again, it keeps the trend in play because we're not managing to take any of it back, much of it back at all. But there's still much. Yeah, go on, mate.
I find both of them, Aussie and Kiwi, trading pretty miserable right now. Really, I was expecting more of both of them, and the fact we can't hold above that 63 in the Aussie, can't hold anywhere high 56s on the Kiwis is it's a bit it feels a bit miserable to me. I'm not going to say because I'm not really bearish on either of them either, but I wouldn't even rule out one day that there may be a little accident coming to the downside, people losing patience with it, unless, as you say, and as we're like drawing there, unless we get that 63 and we hold it, and then you move through 63 and a quarter, then the Aussie should continue its way higher. But until then, I think we need to be patient or just trade the ranges. Yeah.
Yeah, absolutely, mate. So, what do you think the reason why it's quiet is? It because when you get tariff focused headlines elsewhere,
Yeah, we
because
don't.
there's no focus on the Aussie, although there has been with that steel stuff, that the market just doesn't want to trade it.
I think the market tries to trade it, Ryan, but it's you need real money flows to drag it through levels. That is regardless what we think. A currency does not move because the currency wants to move. A currency has no, I mean, you can't make a currency move without flows, right? And so I guess a lot of people may, like the real monies, may still be on the sidelines, and we are trading intraday stuff right now until there's clarity on the tariffs, or sorry, or the fact that we can't rally above that 63 and hold it may mean that there are really people sitting up there. Okay, when the Aussie or the Kiwi rally, or let's keep it to the Aussie right now. We need to sell a few because we don't see this thing ending very well. So that may be the other reason. Um, so it's either or a bit of most of the time a bit of both. But yeah, as I said, I mean, to create big moves or bigger moves, break trends, take directions, accelerate trends, you need flows. There is no other way around. And yeah, I guess that the flows are not that big right now. Has to be said, in the case of the Aussie though, that when it goes down, we also find buyers. You know that where is that low 62s there around there. And as Mike also said, like there's RBA and RBNZ next week. Perhaps we need to wait for another week, and then the real monies will unleash their powers and do something with it. But for the time being, yeah, I mean, for as long as we're in the range, don't look for much more.
Yeah, yeah. As far as whether those tariffs are being reciprocal tariffs being priced, I don't know. We've obviously priced some tariff risk, but until we hear what he's going to do and who he's going to do it to, there's still potential to move. And it's probably not so much the dollar; it's the other currencies. It's the currencies of the countries who are going to get hit more than the dollar. So, you know, as we've been saying through this, it's not a dollar trade anymore. It's a country by country trade that you need to keep an eye on for that. I was looking at oil earlier as well. I wanted to get your opinion on this one as well, Kay. Um, it's looking soft again. We got obviously Trump doing his drill. If we get peace in Ukraine, that opens up again energy markets for Europe. Do we see much more downside on this? And you know, can it actually break this lower level? I'm looking at US oil because it's got this solid
Yeah,
level
uh,
down here.
yeah.
Can we see downside, or will cheaper oil spark a bit of a manufacturing revival?
Well, that's going to be the other side, but that's going to be only a second stage because um, if you slap tariffs on it, I think first of all it's going to make it it's going to make it more expensive because they will have to invest more to drill more and then invest in more refineries and things like that. But I don't have a very good view on or no, I don't have a very positive view on oil because just of the price action as well. If you look at since the start of the war, and then OPEC trying whatever they can, and then now drill, baby. The thing I think we can go back to maybe 63, 62. I wouldn't be surprised to find it back down there because it just every time it tries to rally, it get heavily slapped. And yeah, I don't see really it go higher for longer lasting right now, unless something really changes.
Yeah, no, I think I agree with that. So probably some further downside beckons for that one, and obviously that is a potential disinflationary move as well if it brings down the rest of the commodity block with it as well.
That's
One other pair
by the way.
I'm obviously keeping a beady eye on is my Aussie Kiwi, which is still sailing above 111, though it is struggling to pick up any more momentum above here. We've tapped into that 111.40, 50 area that I've got as potential minor resistance up here. But I don't know, I might have to think about this one, how long I sit in it for. Obviously, the RBA and RBNZ next week might be the crunch time for me, see what we do and where things are after that. Or I'd obviously love an RBA cut, but I'm still erring to the side that it's not as perhaps not as forthcoming as the market is expecting for this meeting. Last one, I know you probably want to talk about it as well, Kay, but this dollar CAD, I'm running my buy stops below. We've had a little break underneath this level, but it hasn't done what I'd like it to do, which is break here, trick a load of stops, and see a bit of a decent move down. So maybe we just haven't found the stops yet, or maybe, Kay, I don't know if I'm beginning to think maybe there's some decent buying interest, because every time we've been down here, there's buying, and even that dip under buying. I don't know who or what, but it's feeling like it's still well supported, even if the rallies are looking weaker and weaker.
Range traders can be very strong, and especially if they are supported by perhaps some option activity. I mean, I guess like with this big spike, that option interest has been going higher. And then I'm not talking about what you see on the COT or whatever. I mean but really like players, have probably ramped up bets. And as a matter of fact, if you look at the 1 month dollar CAD, it's still relatively high. The bias is still for calls over puts. So I think it may hint that there's a bit of interest to buy down there. And also, if people have options, usually the hedgers can just keep it in a range at some stage. It's not overly expensive right now. It's coming back, actually. It's coming back from last week peaks on the dollar CAD. But yeah, I think some are disappointed with this move. Perhaps that quick move down below has set off a few people short-term shorts, and then when you get back above 70, 80, they buy back. And yeah, and yeah, I don't know what to do with it right here and now.
Yeah,
I've said, like, if it goes back up to 143.70, I'm going to try and sell it, but it never even got there. So for the time being, I'm not doing anything with it. But I guess we need to respect more and more than that 142.50.70.
yeah, I'm actually surprised that these vols are this low, considering they've been in the firing line for tariffs and continue to be in the firing line compared to the others. Yeah, a bit of a surprise, even in like the overnight stuff. If you think we're going to get a executive order dropping in anytime soon, yeah, not sure why the lack of volatility there.
Yeah, the overnight spiked up to nearly 15%, if I recall well, and now we are turning around 8.5, 9% on the dollar CAD. Yeah, that also means that they're probably going to be more interest on both ends of the ranges.
Yeah, absolutely. And don't forget, this handy little widget is on our ForexAnalytix dashboard, which you can obviously get if you're a subscriber to ForexAnalytix. And there's plenty of analysis going up on there from all the team. Got this handy thing here. You just click on it, and it gives you the latest analysis that's gone up. There's Gregor with his waves today on pound yen. So lots of different analysis on the platform that we're all putting into during the day. So if you want updated analysis, then you know where to come and look. Right, Kay, I'm going to hand it over to you, mate.
Yep. I'm just going to go back because we saw this Euro Swiss. And if we look at the dollar Swiss, we had spikes there. To me, the 92 is still going to be key, of course, for what's happening. So the range to me is still 1992. Right now, it's 1992. And if we get outside, then we need to be very careful. But even the 9150 has been showing up in between many times in the past as well. So when you get those kind of spikes and then coming back, it may be that just above there you run into layers and layers of offers, and that seems to be the case again. What we are seeing, which is still supportive of the fact that okay, this could be there could be a reversal here on the dollar coming, but it is still supportive of the fact because if you go down and you see the same thing that people are on both sides of the coin here, and so for as long as we see those kind of moves that we see here, it's a range because there seems to be interest on both sides of the coin as well. It can be driven by headlines, of course, and it can be uh, um, driven by some data. But if you look at, for instance, the CPI this morning in Switzerland, we may have thought something one way or another, but it didn't really affect too much of the direction. So I just want to point out, same as in the Euro Swiss, those levels that where the dollar and where those Swiss pairs are being kept right now. So you have to take them into account, okay? And on the other side, we are on a little bit of an intermediate level here around 94.40 on the Euro Swiss, but I think the real one is going to be here around 93.60, 80 again, because this is the range that we are trying to make right now. It goes below here, I guess, or I would think, I would suppose that there's something wrong with the euro. Yeah, we can break down here and go back down to revisit the lows, but if we break below here, something must be wrong with the euro. So look at our traditional the metals, and so I said like there's a bit of a risk that we are going for a move lower. We did, and then all of a sudden the market realized, well, hang on a bit, gold is still an inflation hedge, and we roaring back up. So now we are back to watching this 29 2025-ish and the 29 and a half, this extension here above, which are going to be gateways, I suppose, if we break above and hold above to print that famous 3000, which I think on the longer term, I think I've got something just above 3000, but it could also, yeah, it's still 100, even $100 higher, and 3100. There are some real stuff coming in there. But obviously, since we are trading new all-time highs, those are just extensions that we try to bank on. But I guess if we see another 150, $200 rally from here all of a sudden, then it may be enough. Just don't forget that um, again, if you look at and let me just show what's happening in the short term. We had this rally after the numbers, but then again, this is the Asian time zone, and in Asia we are going higher again. So always, and I always like to look at what's happening in the Asian session to know whether China or even Pan-Asian interest is keeping it up or not. And we are seeing it again, we are seeing it again. From Monday onto Tuesday was the same thing. From last week, same thing. They are still buying the Asians. So I mean, I would not dismiss that. Even if you look purely at prices, you have to know what time zone is moving the thing as well. Silver is different. The move was done last evening, and there was a bit of an addition to the move. So silver has gone up. It has obviously, being gold's cousin, it has received a lift in sympathy with gold, but we're still not breaking above 32 and a half. But it may have jumped for different reasons. And the outlook of ending a war and perhaps the rebuilding, as Ryan also already mentioned, can be positive for stuff like silver because it's an industrial metal. Okay, so it could go higher. It could go the same way as gold, but the fundamental reasons will likely have to be a bit different, as I usually say, but they can take, of course, the same direction. And if I may, if it's going to be a rebuilding effort, that is going to be the driver for a higher silver in the end, it is probably going to outperform gold. That is the way I'm looking at this metal right now. Oh, by the way, dollar yen is coming back onto that 153 3/4 zone that we spoke about. When it rallied through, it accelerated up to high 154s. Now we're back here, and I think, if I'm not mistaken, that, look at this, the bottom of the cloud is right around here. It comes in at 153.60 today. So that is something that we need to pay attention to for the close of the day. And with that, Ryan, back over to you, mate.
Thank you, mate. Yeah, I've just had a little nibble down here in dollar yen, up against this level. I was just seeing and keeping an eye on that as well. It was the breakdown point, and we tried holding it on the way back up for a bit. So let's see if it holds as support. I'm only having a little scalp. I'm not getting anything big at the moment. Last few dollar yen trades, you started getting the direction, and then you take a bit of profit, and then you get knocked out on the balance. I've had that done twice to me now. So yeah, it just seems to be the case at the moment. So keep it slow and steady, I think, is the way to take it, folks. But be quick with them profits. Right, that's it for today. Thank you as always, K-Man, and thank you guys and girls for coming to the Flow Show. Have a wonderful day, everyone. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.